Hello everyone, my name's Dean. Let's talk crypto. This is where you subscribe for daily Bitcoin updates and technical analysis. We track the price of Bitcoin as a proxy for the cryptocurrency markets at large. Today is August 31st, 2022, and I do believe that this is the bottom of not only cryptocurrency, but the stock market, a local bottom, okay? And that we can, as I said yesterday in my yesterday's live stream, experience 6 to 8 months of positive price action, all right? Now that 6 to 8 months of positive price action is going to be particularly strong in cryptocurrency, right? In the stock market, not so much, and I'm gonna get into that exactly. I'm gonna be talking about specifically the S&P 500 or the SPX. I'm going to be talking about Bitcoin and other altcoins, and I'm going to be looking at the DXY, the dollar index. Okay, if that interests you guys, then watch until the very end. Note the new format. I'm going to start doing more live streams, and then what I'm going to do is I'm going to briefly, slightly, ever so sort of lightly edit the live stream and cut it down a bit as a recorded sort of pre-recorded content for the day. Okay, so that's gonna be the new format, just so you guys aren't confused. Let's just get started and double check that everything's streaming properly, and I hope you guys are having a great Wednesday. Okay, looks good to me. Looks good to me. All right, definitely like the stream on your way in, and subscribe if you're not already subscribed. I'm basically most interested and most focused on technical analysis. Okay, I am aware of the macroeconomic backdrop. I'm aware of various fundamental cues and theories. But the idea of technical analysis really rests on the knowledge that everything is in the chart. Okay, you can see everything in the chart, and so this is pretty much the premise of the channel. I'm looking at the charts exclusively, and from that there are many insights to be gleaned. A lot of times just looking at the chart exclusively, you can see exactly that inflation is likely to go down. You can see exactly that despite the economy being bad, stocks are doing well or crypto's doing well. Remember, the stock market is not always the economy, right? A lot of times the economy is doing great, stock market's not doing so well, but typically it's the other way around. Stock market's doing great, economy sucks, right? We've seen that a lot of times, but a lot of people are going to be confused and short these markets basically only because they know logically that the economy is in shambles. Not just their country's economy, the US economy, but the world economy is in shambles. Inflation is rampant, there's a war, so on and so forth. They're going to want to short the market. Guess what? It doesn't work that way. It doesn't work that way, right? When's the last time you saw that because the economy was doing bad, ergo the stock market was failing or something like that, And this is the power of technical analysis, and this is why actually people resort to technical analysis, because the idea is that there are other cycles, there are other trends at play that markets respond to, that markets react on. It's not necessarily what was said in the news one day. Okay, maybe on a short-term basis, but like in the aggregate, it's not that. Okay. So, let me just double check once again that my comments are all right. Perfect. Okay, so let's get started. Let's get started with Bitcoin. Okay, I'm gonna get started on the 4-hourly time frame, and we can see here some nice basing. Okay, what do I mean by that? Basically, you're forming a rounded bottom. Okay, and that is a bottom signal. Okay, remember, when you're looking at these rounded bottoms, they don't always have to be reversals. Sometimes they're consolidation for continuation, right? So sometimes you get a rounded bottom and it's an intra-wave correction. So it's something like this, all right? But sometimes that rounded bottom is indeed a reversal consolidation, which leads to upwards price action. Now, yesterday in the live stream, we were looking more specifically at this move right here. Okay, we were right here yesterday, and I was saying that we're likely to get a bounce here, and we did indeed get a bounce up. Okay, now on this channel, I'm not trading, short time frames. I think it's highly risky, especially at this point in the market. It doesn't make much sense to trade short-term moves. Okay, I've just been accumulating positions for big gains. So although that would have been a nice short-term trade, but once again we have a correction, a three-wave correction to the downside, it seems. So question is, when is this consolidation going to be up and finally result in a big move up? Let's zoom out for just 1 second and go on the daily, just to keep our bearings about us and understand what's going on. All right, since June 18th, we've hit a bottom, strong bullish. So this is daily time frame. Strong bullish hammer candles, a strong wick to the downside, showing lots of buying pressure here. Okay, thereafter we hit a three-wave move, followed by another three-wave move. That's an AB base. Okay, and so that is the first degree of AB basing, and it looks like we did that a second time here. Okay, looks like we did that a second time with another A wave and another B wave. Okay, you have 5 waves here. 1, 2, 3, 4, 5. Okay, we know that every B wave, every corrective wave, it doesn't matter if it's an A wave or a B wave, every corrective wave ends in impulse. So this is a 5-wave impulsive move. For people saying that we have to go lower, even if we did have to go lower, we'd have to first go higher before going lower, because here you see 5 waves, and I'm going to prove that to you right here. So let's zoom in back on the hourly time frame. Okay, let's get rid of this. That just lets us know where we're looking. And here's the count. Okay, so from here, this is an impulsive wave. 1, wave 2, retracement to between the 382 and the 618 of wave 1. Wave 3 is typically the longest wave. It doesn't have to be the longest, but it's typically the longest, and it just can't ever be the shortest. Okay, and then you have a complex wave 4 correction. Okay, so it's relatively complex as well. It's not only complex in its constitution, right? It looks like a double or triple 3, WXY or WXYXZ, but vis-a-vis wave 2, which was simple, this is complex. So, by the principle or guideline of alternation, this is exactly what you want to see. And then wave 5, which is your final wave, in which you have a very nice ending diagonal. Okay, 1, 2, 3, 4, 5. Okay, so the ending diagonal could actually, let's see, 1, 2, 3, 4. Yeah, I think the ending diagonal ends here. And what we're going to do is we're going to turn on the volume indicator just to check, see if we have any capitulative volume. Yeah, we do right here. Okay, so that's your 5 waves down. So this is your 5-wave structure. So remember, if you have 5 waves, whatever, even if you're going to continue this, and this is wave 1 of 5, right? You have to put in a wave 2 before you put in a wave 3, okay? People who think we're going to go to 14K, right? You first have to go up before you go down. But my contention is that this isn't an impulse. We stopped putting in impulses in cryptocurrency to the downside, right? Major impulses in May and June. Like that was the end, right? It was May 12th for most altcoins, and it was June 18th for Bitcoin and Ethereum and other assets. Okay, so for me, this is simply part of a larger AB base, as I just stated. Okay, and this one is the one I'm speaking of in particular, right? You have your A wave here, and you have your 3-wave B wave. I would call this small b because this is the second degree I'm looking at. Okay, so if you have 5 waves, then what comes after that is either a consolidation into wave 2, right, which is a 3-wave move for continuation, or a consolidation reversal, and I believe that we are getting the latter. Okay, because all of this since June 18 has been 2 degrees on the higher time frames of consolidation reversal, and here is just a pivot. So let's zoom into this right here. Okay, and I think it's important to get context because a lot of times people go in to the hourly time frame, 15-minute time frame, 4-hourly time frame. Maybe they bust out indicators, but because they have no context for what they're looking at, it's really hard to read. Okay, that's why it's always important. Look on the larger time frames, and Elliott waves is a great tool for reading larger time frame moves, right? There are others, but you want to make sense of what's happening on the larger time frames and then zoom in to really find your bearings. Okay, so if we're looking at this as a consolidation reversal, everything from here, once again, you're looking for 2 degrees of consolidation reversal. All right. If you're not subscribed to the channel, just follow me. I'll explain it. I explain it literally every day. I understand that it's arcane. I understand that it's wonky. So I do take the time to explain it. Apologies for those of you who have heard it a million times. Again, this is your big A. This is your big B. These are your first degree. This is your first degree of AB basing. Ralph Nelson Elliott, the progenitor of Elliott waves, called this AB basing, or a sequence of corrective waves that were always identified before any asset was to change direction, change course, change trend. Okay? And in my personal research, I found that you need 2 degrees, at least 2 degrees, before any kind of reversal. So that's your first degree, and your second degree is probably this right here. Okay, that's 3 waves up, that's 3 waves down, and what I like about this is that actually we may be looking at a zigzag where you put in 5 waves somehow, right? A concerted 5th wave here, and then 3 waves down, respecting the 0618 of those first 5 waves, and lo and behold, that's exactly what you have here. 1988. And do you see this reaction? So that reaction, to me, when you see a big strong wick like that, again, you need context. A strong wick here and a strong wick there, depending on what time frame you look at, could be inconsequential. Could be much ado about nothing. Here it's part of an ending diagonal, right? And then 4, 5. That's a part of an ending diagonal, those strong wicks. But here, this strong wick tells me whatever this is right here, it's exhausted, it's finished. It's 3 waves down, boom, and price wants nothing to do with this level anymore, so it has a violent reaction to the upside from it. I think what you're getting here is the summation, the conclusion of your small b. And if this is indeed the case, what's coming is a violent move to the upside, or the start of the 2022 bull market for Bitcoin. Okay? All of this up until now has been corrective price action. And it's been tough to read, right? It's been tough to read because corrective price action is by definition capricious. There's so many different combinations and permutations. You can have different types of A waves, different types of B waves. You just saw an A wave here that's apparently a 5-wave move, right? Whereas, you know, some A waves can be 3-wave moves. And then you can sometimes get composed B waves, or sometimes you get zigzag B waves like the one you got right here. Do you see? So it's hard to read as it's forming, but after it forms, you can try your hand at it and get a decent idea as to what's going on in the market, okay? We don't need our volume indicator right here. So that's basically Bitcoin on the smaller time frames and the larger time frames. This is why I think Bitcoin has bottomed. Again, looking at the larger time frames, seeing on the daily how we put in 2 degrees of consolidation reversal, or AB basing, and then moving on into the smaller time frames and seeing the pivot put in for a move up and out of your 80-day AB basing in Bitcoin. Now, we can throw on a few indicators. Let's throw on our EMAs. Okay, on the hourly. Actually, it doesn't really make sense to throw on the EMAs on the hourly. What I want to do is, let's throw on our momentum indicator. Okay, our Stochastic Rsi. And our Stochastic Rsi is indeed oversold on the hourly. So we do know that this wick is likely coincident with a larger move up, okay? And the last thing I want to say about Bitcoin's price action in these past few days is, notice how this level right here, the 20K level, has been staunch support. It's been staunch support. How many times have people who have shorted the market been disappointed because as soon as you get around here, you have a violent reaction to the upside. You come down, you have a violent reaction to the upside, okay? And that's not for nothing. Zoom out, just as I have on the thumbnail, not clickbait. Zoom out on the weekly time frame, and you can see exactly why this is. This is strong support, and it's been strong support since 2017. This is your 2017 high, right? It's the 20K region. You come up, you put in a composed B wave, and it ends in the March 2020 COVID crash, as they call it, or as we call it, just, you know, your impulsive wave in your last wave of your flat correction. And then you put in that first minor wave, which is 5 waves up. This is 3 waves down. You do some AB basing. You go up for the next 3 waves. Crypto is bottomed. And I've done this before, but I'm going to do it really quickly with you, okay? First thing, you take your Fibonacci retracement tool. If this indeed is a wave 1, you take it from the bottom to the top of that wave 1. Where do you see these 3 waves come down? Between the 382 and the 618, which is the golden pocket of Fibonacci retracement for a wave 2 correction, okay? Between the 382 and the 618 Fibonacci retracement. So anywhere between 22K and 11,300 is where we could expect this wave 2 to end, this 3-wave move. Okay, that's our first indication. Second indication, just taking this flat correction, this ABC flat correction, okay? You want to take, remember, an ABC flat correction typically hits between the 1 to the 1236, meaning the Fibonacci extension of the A wave, retracement of the B wave, and then extension of the C wave typically hits between 1 and 1236. That would have given you a run-of-the-mill flat correction if we hit between 1 and 1236. But what you got was a 1618 hit, which is what you get in the case of one of those extended flat corrections, if you will, right? Extended flat corrections. That's not a technical term, but here you will notice the C wave or the impulsive wave come down way beyond the 1 and 1236, and typically that extension hits the phi ratio, or the 1618. So you already have that, right? And that was 19,872. And so after that hit, and it wicked down below even, down to 17K, you got your reaction upwards. There's a reason you got it upwards, because there's so much buying pressure down here. There's no reason to sell down here. So Bitcoin's entire 80-day consolidation was done in a bullish manner, where you created that rising channel, which a lot of people think is a bull or bear flag, but we shall soon see. Yeah. So that's the second reason, and the third reason is you want to look at this right here, this impulse. And for me, and I took a lot of time to read this as it was forming. I had so much trouble reading it, but once it's over, it's more plain to see. This is what we call a double zigzag. Okay, a double zigzag. If you want, I can refer you to where it's cited in Prechter and Frost in the wave theory manual on Elliott wave theory. But essentially, it's a WXY. Okay, it's a three-wave move, but it's impulsive because, and the W is composed of a zigzag, and then the Y is composed of a zigzag. So you see, it's essentially something like this. Do you see that? A double zigzag. That's W. This is X. That's Y. Okay? And the tell of this, it's not a regular 1, 2, 3, 4, 5, which a lot of people are counting it as, but just if you're careful, you can't count it as 5 waves. And trust me, I've tried. But a lot of people are saying it's 1, 2, 3, 4, 5. But like, what do you make of these wicks? These aren't small wicks. These are, when you see big wicks like this, that's a capitulative move, the summation of a trend. And indeed, it is the summation of a trend. It's the summation or conclusion of that first bit of your zigzag. That's why you see those wicks. Those are the reasons. Those 2 wicks are the main reasons why it's not a regular 1, 2, 3, 4, 5. Most people are counting it as 1, 2, 3, 4, 5, but it's not. This is not a run-of-the-mill extension, 5 waves down. And I know I counted that as, I counted it as that as well. There we go. In the beginning, but it's not. Look carefully. And double zigzags. Even Dan Dowd at Dan Dowd Trading, shout out to him. He recognizes this. Not that many Elliottians recognize the double zigzag, but he recognizes this. If you're careful, you'll see it's a double zigzag. Most people who dabble in Elliott wave can't see that because that's an advanced read. Okay, and I think that's why most people got thrown off. And again, more people got thrown off as well because this region, the 1 to 1, 2, 3, 6 Fibonacci extension, was where most people were expecting the end of this impulse, right? Most impulses end between 1 and 1, 2, 3, 6 in a flat correction, and then it came down. A double zigzag is extra impulsive, and so we hit the phi ratio. A lot of people didn't see that coming. Okay, so that's pretty much why Bitcoin is bottomed. Now let's have a quick look at the S&P 500, the SPX, as well as the DXY. Okay, and guys, if you're getting value, definitely like the stream. Shout out who you are, where you're listening from, or where you're watching from. Always nice to hear. And yeah, let's get on with it. So this is Bitcoin's case, which I've made many times on this channel. Now let's look at traditional markets, because we know that traditional markets, and we're going to come back to Bitcoin, so don't worry, traditional markets are very, very correlated with cryptocurrency markets, especially now. Especially after COVID, right? Everything kind of went to the side of being heavily correlated. So let's look at the SPX, okay? We're on the hourly time frame. Again, when we do our analysis, it's best to zoom out, okay? Get some context. I have context, but for the purposes of the live stream, I will I will present it once again, just to make sure everybody's on the same page. Okay, you'll see some drawings, just ignore them. I will explain. Okay, this is how I've marked up this S&P 500 index chart. Okay, it's on the daily time frame. First thing I want to do is this. I don't want to take time and energy into trying to read the entire history of the chart. Okay, I'm not trading this. I'm using it as an indicator. Okay, I'm not trading this. I'm using it as an indicator. I want to know more or less with a high degree of probability when these traditional markets, which I'm using the SPX as a proxy for, are going to go up and when they're going to go down. Okay, this to me is very clearly a flat correction. Okay, and that's a big flat correction. So for me, everything before this is a certain wave and everything after this is a certain wave. Okay, that's my first read on this market. Okay, so whatever happened between 2018 and 2020 demarcates two different markets. This was a corrective market. This is obviously an impulsive market, and this was an impulsive market before. Okay, now that I have that sorted, I'm going to focus my energies on reading this right here, this trend. Okay, first I want a general idea as to how long this took. So I take my ruler and I see that from March of 2020 to December of 2021, for about 650 days, which is quite a long time, you had uninterrupted growth, essentially up only price action for 650 days. Okay, that is pretty hot. I mean, that's an overheated market. All right, and in that time, the market went up 108%. Okay, so that's nothing for crypto, but that's a lot for equities. Okay, so what I want to do also is I want to see on the momentum indicator, going on the monthly time frame, what that looked like. Okay, so indeed, going on the monthly time frame, from that big correction, which completely bottomed this indicator out. This, I'm going to make it bigger. This Stochastic Rsi, right, was bottomed out after we finished that. We completed that big ABC correction. We basically went up for 650 days, and indeed, our momentum indicator, our Stochastic Rsi, topped out. It became oversold. Okay, right there at the end of that 650 days. And so from then, we pretty much bottomed out completely. Okay, that tells me this, without even looking at this, I can tell that's an initial break of structure. Okay, because this is a strong move down, really breaking that uptrend. Okay, but our momentum indicator is showing us that it's basically completely reset after 650 days. That move right here, and let's just measure that really quickly. So this move, just a 24% move to the downside, it completely reset that 108% move, taking 650 days. And that move didn't take too long. Although it took 650 days to get there, it took only 243 days to bottom out the indicators. Okay, so what can we expect after a swift move down? Typically, and this is basic Elliott wave theory, impulses happen in 5, right, and corrections happen in 3, right? That's why we talk about flat corrections looking like this. Sometimes it's a flat correction, sometimes it's a zigzag, sometimes you get composed, WXYXZ or WXY. They're all flavors of 3. Okay, so we always want to think in terms of 3 when we're looking at corrective sequences. Even this move itself was a corrective sequence in 3. It's an ABC zigzag. Okay, now what's important about this is you have to also understand we can use time, use time in Elliott wave theory to shore up our analysis, or to really get a handle as to what's going on. Not just price, but time. Remember, if the uptrend took 650 days and this correction took only 240 some odd days, let's say 230 days, something like that, then we know that it can't be over. This is just one part of a three-wave move. And this is why I have this ABC correction kind of noted or sketched out, because it's not possible that you have 650-day move followed by a 200 and some odd day move, and that 200 some odd day move is an exhaustive correction of that 650 days, right? Why? Because the principle of Elliott wave theory states that waves of a same degree are comparable, or they're equal or proportionate in time and in price, right? Remember, you're not just doing price analysis, you're doing time analysis. Everything that you're doing on a chart, you're looking at price as a function of time. So don't discount the time. And in appreciating the time, we know that we will need approximately 650 days for this flat correction to go. Okay? So that's what we're looking at here. Now, why do we have it coming up here and being an expanded flat, or a flat correction where the B wave, it breaks the plane of the A wave? Very simply put, that's what you typically get. B waves don't typically look like flat corrections, right? Although Ralph Nelson Elliott called them flat corrections, and he called a flat correction that looked like this an irregular flat, that's actually what we typically see. So, you would say that that's a regular flat. A regular flat is where the B wave moves up on the A wave. And one of the reasons we think it's going to move up, we said yesterday, I'm not going to repeat it exactly, is from what the first wave, projecting the first wave that we've gotten here, and I'm going to zoom in a second and show you that. So let's not talk about that right now, but let's talk about the second reason. The second reason is simply, go on log scale, you see that there is a trend, and a trend that you've been playing with since 2010, and that trend is this dotted line. And this trend has served for the past 12 years to contain the price, right? Expect this trend to be retested upon the counter wave. So the A wave is the initial breakup structure, the B wave is the counter wave. The counter wave will likely retest that, okay? Now, this is why the SPX or equities are up, and this is why we can expect them to go up. Also, look very simply, keep it stupid simple. This momentum indicator, one of my favorite momentum indicators, if not my favorite, the Stochastic Rsi. What does it tell you? It showed you very accurately that after this correction, and once again, do you see in this flat correction that you have down here? Look at how that B wave went up and broke the plane of that A wave. Do you see that? It's again what we can expect. Look at what happened since then. You got positive move up on the Stochastic Rsi, and it topped out. It topped out almost exactly at the top. So let's say you knew nothing about technical analysis, you just used an indicator, and you decided to buy at the bottom and sell at the top of a high time frame Stochastic Rsi, you would do very well. Sometimes, the simplest analyses are the best. It's just people have to wait. That took 650 days to wait for the price to get up into this oversold territory, okay? And then you would have not done anything. You would not have bought until it got back down to overbought territory, and then you would not have done anything until it got into oversold territory. It's oversold right now. It's right down here, okay? And we can actually check specifically where it's at. Where is it? Here? Nope. Is it? I don't use this often, so I forget where it is. Yeah. So the Stochastic RSI right now, the K line's at 11 and the D line's at 6, okay? Anything below 30 is technically considered oversold, okay? So right now we're oversold. This is another reason, very simple reason. I could have started the video and ended the video and just saying, look at the Stochastic Rsi on the monthly time frame. On a high time frame, we're clearly oversold. The price is going to go up. Okay? So that's what you see on the high time frame on the S&P 500, which we're using as a proxy once again for traditional markets. Now, if you jump down into a smaller time frame, why have equities bottomed? Okay, and because we've already gotten an impulsive wave. Okay, we've already gotten an impulsive wave. Here's that A wave that you saw on the larger time frame. All right, that 3-wave move right here. Okay, ABC. That's your zigzag down, and following that, you did AB basing for a B wave. And that B wave, basically this is the base of that B wave, okay? So it's corrective, so that's 1, 2, and now this is the 3rd wave, or the impulsive wave of your B wave. And you've already put in the first of 5 waves. 1, 2, 3, 4, 5. Or actually, does it go 1, 2, 3, 4, 5? Okay, something like that. Okay, so it's an extended 5th wave that you got. And now your initial break of structure, or no, I'm sorry, that is the correct count. I think wave 4 is up here. Okay, so that's a 5-wave, run-of-the-mill. Wave 1 is comparably sized to wave 5. Wave 3 is the longest of the Elliott waves. Okay, and now you have a run-of-the-mill wave 2. What's a run-of-the-mill wave 2? A run-of-the-mill wave 2 is a zigzag where people don't really believe in the change in trend. Okay, so they sell into strength. So that wave 2 is typically sharp, and it's typically retraces between the 0.382 and the 0.618 Fibonacci retracement of that first 5-wave impulse. Okay, so if you take your Fib retracement tool from the bottom of this purported 5-wave move all the way to the top, you see exactly between the 0.5 and the 618. You're in the golden pocket right here for this Fibonacci retracement. Okay, so that is why equities have bottomed. If you want to zoom in even more, you should now be able to observe a bottoming, some AB basing, some consolidative and reversal kind of patterns here. So now on the 15-minute time frame, guys, you notice how the proper analysis goes from high to low. You want to go from high to low because you need context. You understand that looking at something, maybe if you're good enough, you can look on a small time frame and just understand the larger context. But you want to be prudent. Look at a high time frame, look at the daily, weekly, monthly, whatever. Understand where you're at and what you're doing, and then progressively go into smaller time frames to really suss out the price action. Okay, and so here our assumption is that, just like I showed with the retracement, this 3-wave move, this zigzag, right, which you have here, let's see, A, B, C, okay, or is this, maybe this is the end right here, okay, I think it's A, B, C right here, okay, so this is your 3-wave move down, and from here, I believe you start your consolidation reversal pattern, okay, I'm not exactly sure, let's see, I don't know about that. I think I was right the first time. I think it goes A, B, C all the way down here. Okay? And basically what you have here is your consolidation reversal pattern. Okay? And so let's zoom in there. Guys, don't forget to like the stream. Shout out where you're listening, watching from. Always appreciated. And if you didn't have a chance to catch this, you know, you can always rewind. These live streams are rewindable, so don't worry about missing anything. That's your initial break of structure. I think what you're getting here is a composed V wave right here. Okay, it's tough to say. It's tough to say because I don't have that much data. It's not like the cleanest chart, but it's very likely that you're getting some sort of AB basing here, and that would be your first degree. But it's also possible that this initial break of structure, and this is your B wave right here, this is your A2 or small a, and this is your small b. It's also possible that that is the case, okay? That you're pretty much rounding out your AB basing, okay? Let's see if we can't get more insights from our Stochastic RSI. And our Stochastic RSI, let's see, on the larger time frame, should tell us where this trend ended. Okay, just judging by the candlesticks, I think I was correct in saying that this was the end of our trend. This was the end of our zigzag, because here you have a strong wick to the upside, right? You have a strong bullish hammer candle denoting the exhaustion of trend. And I would turn on the volume indicator, but I don't have volume. You can't see volume on this chart for some reason, okay? So once again, if you're looking at the small time frame, S&P 500, you will see that we are bottomed out. And remember where we are, okay? We are between the 0.5 and the 618 Fibonacci retracement of this larger move, okay? Let's zoom back out just to prove that to ourselves. The golden mean is called the golden mean for a reason, okay? It's very, very probable and very likely that whatever this retracement is, and people calling this a fake rally are right and wrong. They're right in the sense that it's not an actual bull run. It's a corrective, it's a counter-corrective move in a larger retracement. So if you don't know, if you're not chart literate and you're not careful at how to trade, it's best to sit it out, yeah? Because if you're calling this a fake rally, in a sense, yes, it's a fake rally because you've broke initial structure here, right? This was your initial, this was your initial break of structure. So whatever you did, the 650-day party of up-only price action is essentially done. What you're going to do now is you're going to correct and then counter-correct and then finish out your correction, okay? And we're going to get to that in a second. So, yes, it's a fake rally on the larger time frame, but not really, because this still is going to translate into 6 to 8 months of positive price action to about 5,600 points, right? Something like that. And I'm going to give you an exact sort of projection. And see on the daily time frame, what do you see? You see two things that'll tell you that this is a bottom on the daily time frame. Does anybody see this before I say it? So bust out your Stochastic RSI indicator. And again, indicators are best used corroboratively. If you're just using indicators and you don't know how to read price action, do yourself a favor and start learning how to read price action. You will thank yourself. All right, what you can see with the indicator is strong bullish divergence. And I always say the best way to read divergences are with the Stochastic RSI. You can use typical RSI, but it's quite confusing, and there's no extra points for adding to difficulty. Like, you don't need to make your life more difficult. Stochastic RSI exists. Use it. The regular RSI is good for certain things. I don't think it's great for reading divergences on big moves. This is the best. Look at this. On the daily time frame, you have a lower low set here, right? Price action is clearly making a lower low from this inflection point on the B wave, right? Of this wave 2 correction, zigzag correction. And then on the momentum indicator, that was your first bottom, and now you have not yet confirmed it because your K and D lines, the pink or red and blue lines, have yet to cross. Yet once they do, you will have confirmed bullish divergence, strong bullish divergence, right? Divergence basically means there's a discrepancy in what the momentum indicator is saying and what price action is saying. So strong bullish divergence on the price action and your momentum indicator. That indicates, in using Stochastic Rsi, that you're likely to move up violently, okay? So the indicator is telling us that, and it's on the daily time frame. So that is a big move. It's not 15-minute time frame. It's a relatively large move. Okay. Now, remember, you're in between the 0.5 and the 618. Your typical wave 2 retracement comes to between the 382 and the 618, and most of them come between the 0.5 and the 618. So you're right where you want to be. This is not a fake rally, because if this holds, which it seems like it will, and the indicators are showing us that it will, and when we zoomed in, we saw this price action come down just like a wave 2 would come down, you can project now 5 waves to the upside. So you would project this being wave 1, this being wave 2, wave 3 would be somewhere up here. We're going to measure it in a second, don't worry. Wave 4, and then wave 5. Now, how do you project your waves using Elliott wave theory? Obviously, you don't know, but there are average moves that waves tend to do. On the balance of probability, your wave 3 will hit between the 1618 and 2 Fibonacci extension of your wave 1 and the retracement of wave 2. So we take wave 1, retrace wave 2. We've got the wave 3 ending between 5062 and 5361, somewhere here. Okay, let's just put it at the 618, right? Just for for the purposes of this projection, right? And again, every projection is a placeholder. It's just a way for you to get your bearings. It doesn't necessarily mean that's exactly what price is going to do and when it's going to play out. People misunderstand this. I do videos every day, and sometimes I make projections, but I always adjust the projections, and the projections give me a good idea as to whether to think long or to think short, to look for longs, to look for shorts, to look to protect my position, to have a general understanding as to what the market is likely to do. Again, we're dealing in probabilities, no certainties as professional traders, right? Now, wave 4 comes between the 236 and the 382 Fibonacci retracement of wave 3, typically, right? Not always, but typically, that's what you get. So it's going to be around here-ish. Let's get rid of this one, not to confuse anybody. So right here, right on the 382, right? See, I do this so much, I can eyeball it. Look at that, right between the 236 and the 382. And now wave 5 tends to be the same length as wave 1. Okay, that's one way to project it. That's a simple way to project wave 5, right? So typically you take wave 1, wave 5 is going to be the same, or more or less the same length. Okay, let's add the line here. Make sure everybody can see this. Okay, and then the other way to project, 2 other ways to project wave 5, technical waves. Wave 5 projects to the 618 Fibonacci extension of wave 3. So you take wave 3, right? That's just our kind of dummy wave 3, purported wave 3. Retracement of wave 4, wave 5 would come around here, the 618 right there. Okay, so that's one projection of wave 5, and then the other projection of wave 5 is inverse 1618, which is essentially the same thing. The 618 and 1618 are the same thing. They're 5 ratio. They're just different ways of seeing that ratio, okay? Inverse 1618 of wave 4. So that would be around here, around 5342. Now, this is the region that would coincide with this 10-year resistance. Let's go on the monthly time frame. And again, mind you, all of this analysis is done on the log scale. Remember that in order to faithfully represent large time frames, large price swings, especially in cryptocurrencies, people in cryptocurrencies should know this, but in traditional stocks as well, you need to turn on the logarithmic scale. You can't look at it on the arithmetic scale, or else your measurements will be skewed, okay? So high time frame reads, log scale, all right? You'll do yourself a favor. You see, that wave 5 projection has us butting up right against this 10-year resistance that we keep meeting, right? We met it once in May 2010, again April 2011, again for a period of time between December 2013 and January 2015, and then once again January 2022, and I believe that we're going to do it once again in Q1 of 2023, okay? Last thing I'm going to do is I'm just going to, and so I deleted the count because you don't need a count. Now, you know, it doesn't matter. That was just a dummy count. Now, again, we want to be mindful of time. Time is important. In yesterday's live stream, I talked about how I'm bullish for the next 6 months, okay? One of the reasons I said 6 months, particularly, it's because 6 months is more or less around the time I have Bitcoin topping, right? I have a date even. And again, it's a dummy date. It's just one of my projections, February 19, 2023. Just like you just saw that we do projections in price. Again, you want to know that everything you're looking at, all this chart information, is on 2 axes of information. It's price against time. So just like you can project price, you can project time, right? It's just as valid, right? It doesn't necessarily mean it's going to happen at that time, but you can do valid price or time projections for your moves, okay? So the first time projection we're going to do is simply a rough one, understanding that this impulse took us 640 days, okay? And so our correction should take us around 640 days, okay? Right? So this is the idea. Around 640 days. Because, according to Elliott wave theory, waves of the same degree are comparable or equal in time and in price, okay? So if this is a wave 1 and this is a composed wave 2, right, a flat correction, wave 2 flat correction, this took 640-ish days, that should take 648 days. If it takes 600 days, it's still comparable. Comparable means comparable. It doesn't need to be exact, but sometimes it's literally exact to the hour, okay? If you're doing hourly chart analysis, sometimes you get those. So that's our first analysis. Right now, we've been in this initial break of structure, this A wave, for already 210 days, okay? And, you know, we already put in the first wave up for this B wave. So 210 days, 640 days, that's about 430 days left, okay? So 430 days left. Not all of that is going to be upside, okay? A bit of that is going to be this impulse to the downside. So let's say that maybe half of that time that's of those 430 days of this larger ABC flat correction, maybe 200 days, or, you know, 180 days, which is 6 months, you know, 200 days, which is a little over 6 months, that is going to take us up to this resistance of 5,600, which is where I see the SPX going in the next 6 to 7, maybe 8 months, okay? That's why equities and crypto have bottomed, okay? Not only looking at price, we looked at our main indicator. You can see it on the monthly time frame, we're oversold. On the daily time frame, we're oversold. We're double bottomed, about to cross bullish, right? If you're selling this market, you're probably selling it because you have a narrative in your mind that inflation is rampant, there's a war in Ukraine, China's, you know, not doing so well economically, there's all these problems, people can't buy basic needs, energy prices are through the roof, and you're selling a narrative. But what you don't want to do when you're trading is selling narratives or buying narratives. I know a lot of people think that's what you want to do, but you don't. That's why you want to learn how to chart, right? You'll get only so far selling and buying narratives because, it begs the question, when are those narratives going to take place? What's going to kickstart those narratives into a price move or a price drawdown, right? So the charts show you with mathematical precision where the next trend is. Yes, the markets are going to fall, but not before they counter. You got to counter it, right? 3 waves. 1 wave, 2 waves, 2 waves. That's your 3rd wave. That's your flat correction, okay? So that's the second reason why equities have bottomed. Or rather, cryptos and equities have bottomed. The last and maybe the most important reason is the dollar, okay? The dollar index, okay? Just having a quick peek at the dollar index on the daily time frame. Since it's an index, we can't look at it on any other time frame. We can see a double top, okay? And again, remember, for those of you who don't know anything about general economics and these trends, the DXY, or the basket of currencies pegged to the dollar, that the dollar is pegged with or against, are inversely correlated to crypto, equities, any kind of risk on any asset rather, because if the dollar is strong, then you want to hold dollars, right? Because the price of the dollar just keeps going up. Why put it in another thing? But when the dollar is weak and the dollar is losing strength, what you want to do is hedge against losing value in your dollar, okay? You want to hedge against that by buying things that will retain the value of your wealth. So you buy crypto, you buy stocks, you buy homes. You shouldn't be buying real estate right now, but that's another thing for another live stream. But here we have the dollar having been, and again, we're going to do our analysis. We're going to start wide, and then we're going to zoom in. And I'm not going to go through the entire analysis that I did yesterday. You can look at yesterday's live stream, but essentially you have 5 Elliott waves up. And after 5 waves, what do you know? You get 3 waves down. Okay, 5 waves up, 3 waves down. 1, 2, 3, 4, 5. So you see my cycle waves there. And you see that I counted that final 5th wave. I counted the primary waves in that cycle wave. So I see 1, 2, 3, 4, 5. And then you have a quintessential ending diagonal 5th wave. You only get that at the end of a trend. It is an ending diagonal that is a rising wedge. And rising wedges, what we know about them, they break down and they typically target the base of the wedge. I anticipate that this be our first wave down to the base of this wedge. Wave 2 come up here. Wave 3, longest of the Elliott waves. Doesn't have to be the longest, but can't be the shortest. Wave 4, something like that, and then wave 5. Okay, that is what I see the dollar doing right now on the daily time frame or on the weekly time frame. What you can see is you have an exhaustion of trend. Okay, so these are weekly candles. There's very, very high time frame with respect to the trend that we're looking at. Look at the wick to the top. Remember, doing candlestick analysis, you have a wick to the top. That means buying exhaustion. That means the sellers have stepped in. Okay, wick to the top means you're pushing the price down. You have one of those, I don't know what it's called, morning star. I don't fucking know. It's just you see the wick to the top, you know you're going down. That's exactly what you got here. And you see it once again here and there. You see wicks to the top. Obviously, we haven't closed this weekly candle yet, but you see this is a doji candle, or like kind of an indecisive candle, a little bit of a wick to the bottom, bit of the wick to the top. And so far, halfway through the week, and it's Wednesday, yeah? Halfway through the week, you have rejection from the top. Don't expect this to go any higher, right? Substantially higher, right? Maybe it wicks up and then comes back down, but all in all, it's very likely, given that this is a rising wedge, given what you've previously seen here in the candlesticks, and given that you've put in 5 waves on the larger time frame, this is coming down. So if the dollar is coming down, crypto, equities, S&P, the Nikkei, all that stuff is going up, okay? Those are the reasons why crypto and equities have bottomed out, okay? That's my thesis. Now, I'm gonna look very quickly back at, and I can't really zoom in anymore. So people who may be wondering why I'm not zooming into the DXY any more than just the daily time frame, because it's an index, and it's there's so many things that go into calculating the DXY. For some reason, you just get the daily information. So that's the answer to that. Looking back at Bitcoin, going on the smaller time frame, we're just hovering here. We still have that big bounce. What we're gonna do is you're gonna do A/B basing. You have to do A/B basing no matter the degree, right? Even on the small time frames, you're doing A/B basing. Either you're doing A/B basing for continuation or for consolidation reversal. And then if you're not doing that, you're in impulse, right? Those are your two modes of price action. Guys, definitely like the stream. Let me know where you're listening from. Let me know if you want me to look at any different sort of altcoins. Maurice, what's up? Hey, Osman, what's up? So yeah, that's pretty much it. So the idea, guys, is, again, you don't want to waste your time trading in and out, right? I'm not going to show you my notes, but essentially I went through maybe a few months ago certain ideas I had about how to trade, because I've traded so much. I've been that guy that traded the 5-minute chart, the 15-minute chart. I've been that guy that traded the hourly chart. I've even traded the minute chart. I traded the daily chart. I've traded so many different things, trying to make money, right? Making this is my only job. Obviously, now it's my only job, and I would call what a successful trader, right? I win more than I lose, and I make enough money to keep up my lifestyle. I would call that being a successful trader, right? So how did I get to that point, right? Obviously, lots of trial and error, lots of thinking about it, lots of making mistakes. But what I would say is one of the most helpful epiphanies that I've had about trading the markets is this: there are at different times you want to trade differently. How many times have you heard certain traders say, "Oh, I was doing so well, and then the market changed, and my techniques weren't working anymore"? How many times have you heard that from really good traders? I mean, people who, they could be discretionary rule-based traders, they could be just rule-based traders, they could be they could be fundamental traders, they could be just purely technical traders, they could be support resistance traders, all kinds of different traders. You always hear that. Why do you think that is? It's because you have to adapt. And they even say that you have to adapt. I had to try something else. I didn't know what. And I'll tell you what it is. Sometimes the market, there's 3 different phases of the market. Okay? You have trending markets, okay? Either going up, going down. Everybody knows this. Easy, right? Your grandma knows this. Oh, I heard that the market was going up, or I heard that the market was going down, right? Those are trending markets, okay? And obviously this, depends on the time frame, but let's just say, like, medium term time frame, daily time frame, your market's trending up, so more or less you're going to put more positive price action than you are consolidations. So by and large, you just buy at some point in time and you wait a little bit and your money appreciates. In a trending down market, it's the opposite. You buy, wait a little bit of time, and you lose, and you keep losing money, okay? That's the trending phase. Up, trending down, and then sideways, okay? Sideways is what kills people, but this is the most important market. For if you are serious about learning to trade markets, you want to be most comfortable here. And what I mean by that is not trade this up and down, because that is tough, and only the best of the best can do it consistently. Even the best of the best will lose a lot. Sometimes they'll win, sometimes they'll lose. It's just not easy money, and it's not like I'm a trader. I run a trading business. It's a business. That's a bad business idea. That's a bad business decision. to try and trade this up and down. Even though I know a lot about the markets, even though I could go into small time frames, it's a bad idea because it's a high risk, low reward. It's exactly what it is, a high risk, low reward, okay? So what you do here is either you sit the hell out or you take a little bit and you just play. You play up and down, maybe you win, and you hold on to it. You put your half or 3/4 of your winnings to the side and you take a little of your winnings and then you get back in and you play. But don't expect to make life-changing wealth here. So the sideways market, okay? Now, the most important market is, so why is this the most important? Because preceding this market or this market where you can make a lot of money either longing or shorting, you will have this market. And this market is going to be a consolidation reversal pattern or consolidation reversal market. This is the market you have to read. This is where we're at. All the indicators are saying this is a consolidation reversal market, and it's been a consolidation reversal market since May 12th. In Bitcoin, since June 18th. In Ethereum, since June 18th. The ability to read that consolidation reversal pattern and then react accordingly is what is going to make you life-changing wealth. Sometimes people think if you want to be good at trading, you want to make thousands, millions of dollars, you have to be some market genius. No, you don't. You don't. You just have to be patient. You just have to be patient and understand enough to know, okay, I might not buy the absolute bottom, but you don't have to buy the absolute bottom to make a killing. All you have to do is buy somewhere in this region and you will literally make a killing and then just wait for it to play out. So on this channel, if you've been following, I've been buying my ass off and we've been drawing down a little bit, going up, drawing down, going up, drawing down. I don't give a damn. My positions, my modus operandus right now is to stay alive. That's it. I'm playing defense. I'm protecting my positions. Looking at the probabilities. I'm placing a bet, and the odds are in my favor that if I'm correct, I probably have 9 different multi-million-dollar positions. You heard that correctly. I have 9 different multi-million-dollar positions just waiting. And if my analysis is correct, that money will sort of play out, or sort of that those positions will grow in a matter of months. You just gotta wait. But in order to wait and have that perspective, you do have to do some work and be able to read a market. With some degree of fluency, you have to be able to read a market, right? Because if you have no idea what the market's saying, you're never going to have the confidence to buy, because you're always going to be telling yourself, but the war in Ukraine, but China, but the economy's so bad, but. And you're going to think, oh, 12K's got to be coming, 14K's got to be coming. You're never going to buy. And then finally, when we cross into 30K and 40K and it's a consensus that we're going to, go to the moon, maybe you buy and maybe you still make some money, but maybe you don't. Who knows? But, it definitely pays to get more educated at doing a technical analysis, learning whatever technical analysis you can, and then using basic indicators like your Stochastic Rsi on the high time frames. I'm not talking about hour, 4 hour, daily, right? Your big money is going to be made by waiting a few months, waiting for your $1,000 investment to become $1 million on the high time frames, waiting for double bottom indications, bullish divergence on the monthly. Like, guys, are you kidding me? This is a monthly time frame, right? How many times have you seen bullish divergence on the monthly time frame? Like, that's just ridiculous. That is so bullish. So when I say, like, my projection for Bitcoin in Q1 of 2023 is between 1.7 million and whatever else I said, 4 million or something like that. Like, this is why that shouldn't surprise you. Like, if you see monthly bullish divergence on the Stochastic Rsi, completely oversold, obviously, and been oversold for quite some time, but it's bullishly divergent with a double bottom on the monthly time frame, that should make sense to you. If you know anything about trading, anything about charting, you should be like, oh yeah, that makes sense. I can see that. What's that? A 6,000-7,000% percentage increase? I don't know what it is, but something like that. 1.7 mil, 2 mil per Bitcoin, right? Sure. And then you think about altcoins, what altcoins are going to do, especially with Bitcoin dominance tanking to hell. Look at this. It's 40. It's at 40. When it breaks this, that's really when people are going to understand that it's alt season 2022 going into Q1 of 2023. Like, the big money's made holding altcoins. Okay, and I'm not going to tell you which ones. You know, these are the ones I'm trading, not financial advice. Do your own research. I don't know. You know, there may be another Luna out there waiting to rug on people. You know, but I've hedged my bets. I've diversified my portfolio in such a way that, you know, I have different exchanges, and I have different I have some spot, I have some leverage, I have, you know, different things in different places. I'm gonna make it, and if you're listening to this, you probably are too. You know, you probably are too. But what I would say is, even if you make it, a lot of people in crypto Twitter, a lot of people in the crypto community, they've made it, right? They bought something towards the bottom, towards the middle of the market. They held long enough. They've cashed out. They made life-changing wealth. They're not working anymore. Their main job is to troll people on Twitter or to just act like they're good traders. Actually become a good trader so that you can have cash flow later on. Because you may think $1 million a lot, but it's not that much money, to be honest with you. Everybody, it's not that much money. Yes, it is a lot, and it will change your life. And it will help you, and you'll help your family, help your community, whatever. But, you know, how are you going to invest that? How are you going to make more money from that, right? After your expenses, you're paying tax on that. You know, you're helping out your friends, your family, whatever. You're paying, you know, your debts. You're paying Uncle Sam if you're American. You're paying whatever taxes. You have to find a way then, a strategy for more income. Okay, for cash flow. It's all about cash flow. Businesses are cash flow, right? So how you're going to do that? You're going to do it again. And how are you going to do it again? You're going to be market literate enough to repeat that gain, okay? Even in a different phase of the market. Let's say we get to 2023, Q1 of 2023. Let's go back to Bitcoin. Q1 in 2023, we get up here, okay? And then we start to do consolidation reversal. Be able to recognize a consolidation reversal. People are going to be saying, oh, Bitcoin to 10 million, right? But you're going to see A/B basing, right? It's just going to be the same shit you saw down here, but on the other way down for a correction, right? You're going to see a correction down for wave 4, minor wave 4, and you're going to be able to be wise enough to say, I'm taking my chips off the table. I'm going to ride it out. That's a decision. That's a trade. I'm going to stay in dollars, because at the same time, the dollar's probably going to start going, what's the dollar going to do? I don't know. The dollar's just going to be going up and down, but you're going to say it's too risky. I'm going to hedge out of crypto, right? Be able to read that. Or you're going to say, you know what? I'm going to take a little bit of my winnings and I'm going to short. I'm just going to short. Low leverage, short. Okay, but to be able to do that, you have to be market literate. So invest in yourself to learn how to read markets, to learn how to trade. Don't get lost in what the Fed's saying and all that shit. If you haven't noticed, none of that matters. People are always giving post facto reasons for why markets moved, given a speech or given a certain event. All of this stuff can be read in the markets. Look at this. All right, we're looking at Bitcoin, small time frame right now. Our Stochastic Rsi indicator is indicating a bullish cross. All right, that K&D line is about to cross bullish on the hourly time frame. So we're expecting a move right here. Is this the move? All right, is this A/B basing done? Who knows? Perhaps it is, okay? So what we're going to do now in the live stream is we're going to look at Bitcoin on the small time frame. We're going to look at the other altcoins in my watch list of spot trades, and then we're going to call it a stream. I'm going to take any questions as well. Guys, definitely like the stream on your way in. Let me know where you're listening from. Osman says, patiently waiting. I'm watching from Montreal. Awesome. Bonjour. I just moved here from NY. Osman also says, we learned a lot in this bear market as well, so we may even do some short trades on the way down. Exactly. That's the whole point, Osman. Like, you want to be not only, you want to be versatile, but you also want to be prudent. People shorting, even on the small time frames in this market now, like around now, are imprudent. It doesn't matter if you get a move like this, because so I had a list of rules when I was trading small time frames. I had rules that I would write down, especially after mistakes. Okay, I'd write rules in my trading journal and I'd say, okay, that's a rule I have to listen and follow, or else I'm gonna lose money. And I accumulated maybe 100 rules, right? And they weren't all vitally important, okay? But one big rule that really helped me, that I wrote down in my trading journal, was this: don't counter trade the larger trend. It's too risky and it's not worth it. So the larger trend on the daily time frame, the weekly time frame, the monthly time frame is that we're at a consolidation reversal pattern. We're at a bottom. We're at a macro bottom. And the price, yes, may go up and down and fluctuate somewhat, but eventually the larger move is going to play out to the upside, okay? So that's the larger move. So even on a small time frame, if I was still kind of busying myself to trade small time frames, let's say I really needed, like, cash and I was bored, okay? Because right now all my time is put into literally accumulating positions. Like, if I have any amount of money, I'm like Elon Musk when he sold PayPal for 180 million, okay? He put 110 million into SpaceX. He put 70 million into Tesla, and put 10 million into the Boring Company or something like that. And then he had to borrow money for rent. I'm balls to the wall, all in on this bull market. I've literally put my cash, my chips into the, you know how they say trade only what you can afford to lose? I haven't done that, and that's fine. I'm taking that risk, but it's a calculated risk because I'm basing it on my experience and my edge, which is reading the market. So if I wanted to do short time frame trades, I wouldn't do any shorts. Not because I can't short, it's because it's silly, because any given day, any move can be a violent, complete wreck of my small time short positions. Rather, the smarter thing to do is, if you really want, fast money and do short time frame trades, long, take profit, long, take profit, long, and maybe you forget to take profit and the price just starts running. Do you see what I mean? Don't counter trade the larger trend. Obviously, everybody's different, and some people like the risk, or they like, I don't know, they like to live on the edge, and they actually do quite well counter trading. But few people do. Few people do well doing that. So it's just not smart. The smart thing to do is accumulate and wait. Accumulate and wait. At market bottoms, accumulate and wait. At market tops, accumulate and wait. Yeah, that's smart. That's what you do, Osman. It's a buyer's market. When you're at the bottom, after 450 some odd days, right, of downward price action, after a month, many months of you're oversold, you don't have to be a genius to look at this stochastic RSI. One of the best indicators. If my mother, for instance, wanted to trade and she didn't know anything about trading, I would just say, okay, I want you to pay attention to this indicator, and I want you to use it only on a large time frame. I don't want you to pay attention to small time frame moves, right? When this is here, you sell. When this is here, you buy. That's all I would say. And she would make money. She would be bored for many months at a time, but she would make money because she would beat the market, right? To a high degree of probability, she would be buying bottoms and selling tops. Do you see what I mean? People can't do that. And now they're bored. So what do they want to do? They see a little move down. Oh, let's short it. Let's short it. Let's short it. And to each his own. It's a free world. It's a free market. That's fine. But I wouldn't do that. And that's imprudent. And that's a great way to just waste money. And even if you win that trade, it doesn't necessarily mean it was a good trade, right? Risk management is huge. Risk management would dictate that any moves you made here, whether short term or long term, are buys or longs. And what you want to do is protect your position, meaning you want to play defense, you want to make sure you don't get stopped out, you don't get wicked out. All right, let's have a quick look at everything else. So we saw Bitcoin on the hourly time frame about to cross bullish on that Stochastic Rsi. Cardano also about to cross bullish. No divergence, but about to cross bullish. Okay, after this three-wave move, once again, you see a three-wave move here in Cardano. So yesterday, we had that move down. Actually, wait. Yeah, yesterday it was here. We had that move down, and we went up from here. Okay. Now, what is this? Is this a 5-wave move up and a subsequent 3-wave move down? We shall see, but I believe that's the case. Okay, which would mean that this is a wave 1 and a wave 2 move right there. Okay. SHIB about to cross bullish on the hourly time frame on this Stochastic Rsi. Here it looks like you've got some sort of, you have a nice, lovely rounded bottom here. Okay. And what you have is, I think, a quintessential AB base. Yeah? You have 3. Where's here? Where's my, oh, here it goes. Damn it, where is my pen? How did I lose it so quickly? It's probably here. Here it is. Okay. Here's your A wave, here's your B wave, okay? I think that's an AB base, okay? So Kadena, so if I wanted to trade fundamentals, and I think some people think like this, they think, okay, Ethereum is moving to proof of stake, okay? And a lot of people that are once, heretofore were mining Ethereum and making money as Ethereum miners, right? Now they're out of a job. What do they do? What do they mine? There aren't that many proof of work assets on the market that, are worth their salt in mining. So do you mine Bitcoin? What do? Kadena is a proof of work asset. So people are calling it Bitcoin 2.0. I don't necessarily know if that's accurate, but it's a solid concept. It's a solid sort of, it's a solid project. It has a lot of institutional investment. Basically, a lot of Wall Street investors are behind this. It's solid in terms of its roadmap and its leadership and its building, its development. So, and it's proof of work. And there's a big void now for, these miners going into proof of work. So I expect Kadena to get a lot of attention, at least fundamentally. Will that translate into the technicals? I don't know. Maybe it will, maybe it won't. Ravane, looking bullishly coiled, right? That to me is your A wave, and this is a triangle, which is a B wave, okay? Looks like you're about to go right here. Okay, Litecoin, I think it put in, I don't know if this is a 5, this looks to me like 3 waves, okay? And this looks to me like 3 waves. So I would say, yeah, you're getting a bullish cross, so you're gonna get a move up. Maybe you go up and out, or maybe you do something like this, and then go up. I don't know. But again, you're getting a lot of, up and down, up and down, up and down, consolidation reversal. You're not breaking major support. Just let the price do what it does, okay? We counted the main AB basing, right? On the high time frames, on the daily time frames, we counted big A, big B, small a, small b. Everything else, just details. It's just a question of waiting. Here on reserve rights, you got a nice 5-wave move, I believe. Okay, 1, 2, 3, 4, 5, and then a 3-wave move down. I think you get continuation. I think reserve rights finally got into impulsive price action. So expect big moves there. XRP still in its AB base. Still, right? A, this is composed B. XRP might put in its first impulse. Okay, VRA, same thing as XRP right here. A wave, B wave, A, B, boom. Again, AB basing is not like, oh, there's only 2 degrees. Like, yeah, 2 major degrees. And then, you know, subsequently you can have a lot of small degrees, you know, whatever it needs. And it's always different, right? But you're about to cross bullishly on the hourly stochastic RSI. So that's great. Polkadot, same thing. Big A, big B, small a, small b, boom. Yeah, so just, again, a small time frame, 2 degree AB base. Small time frame, just let it happen, all right? I see 5 waves in Ethereum, 3 waves down to the 618, okay? I see this may be a 3rd wave that started out as a leading diagonal. Okay, that's possible. This may be, so this, I think this is wave 1. I think this is wave 2. I think this may be 1, 2, 3, 4, and then 5, which takes you basically to the 1618 of waves 1 through 3, retracement of wave 4. I would not be surprised if that were the case right here for Ethereum. I don't know why people are shorting Ethereum. A lot of people are shorting Ethereum. It just doesn't make any sense. I think, again, the fundamental trap. But buy the rumor, sell the news. Like, okay. So I think that is the next likely target, minimum target, 1772. Basically your phi ratio. Again, waves 1 through 3, retracement of wave 4. Okay, and let's see if this is wave 1 and this is wave 2. That also coincides with the 1618. Okay, you see what I did there? I took wave 1, retracement of wave 2. My typical target is wave 3 is between 1618 and the 2 Fibonacci extension. That takes me to around exactly the 1770 region. So again, when you look at something from 2 different vantages and you get the same answer, it's highly likely that that is going to be a target. Again, you're not sure, but highly likely. And then the 3rd reason I think that 1770 level is going to be it is because it's right pretty much the neckline of this double bottom. Okay, so I think Ethereum's coming here before it retraces. And today is the 31st. And what do we know about the 31st? Using moon phases. Well, okay, let me back up. Today's the 31st, okay? The new moon was on, I think, the 27th. Was it on the 27th or 28th? When was the new moon? Let me check. The new moon was on the 27th or the 28th. Let's see. Let me Google it really quickly. New moon. What are we? August? It was the 27th. Okay. So what do we know about the new moon? So we know that typically the market peaks, you get local market peaks 0 to 3 days after the new moon. And just on the balance of probability, if you look at the data, you typically get those peaks, those 3 days after. So 3 days after the 27th is the 30th, which was yesterday. But if we got it today, that's not that far off. So I would not be surprised if you got that move in Ethereum, for instance, to 1770, 1750 region, and that represented a local market peak. And then we did some retracement until the next full moon, which would be, I don't know, what, on the 8th, in like a week. Sorry, let me look. So full moon, September, I can't spell. it's the 10th, okay? So basically, that would mean, yeah, 10-ish days. Yeah, I could see that. You take a little, you take some time. But then again, 10 days is a long time for a retracement right here. So, yeah, anyway, we're at the bottom of the market. I wouldn't fade it. New moon, full moon, all that stuff I'd put aside. Given the technicals, given the strong bullish divergences that we're getting, I think it's just strong to buy. It's smart to buy, and don't take profit unless you absolutely have to. Obviously, in my position, I have to. I have bills to pay. This is all I do. I don't have a real job. So I need to take profit on some of my positions. But that's one of the reasons I have so many positions. I have some positions that the purpose of which is to take on a short time frame, and other positions are relatively large that I don't plan to touch for many months. Okay, so kind of seeing the same thing in Dodo here. Put in wave 1, wave 2. I think this is wave 1 of 2. I think you're going to put in a wave 3 of this kind of, if this is primary degree, this would be your intermediate. So an intermediate wave 3, yeah. So yeah, on track. On the hourly time frame, you're oversold, but not completely crossed. Okay, so BNB is almost crossed bullish on the hourly time frame. Looks to me like this is an AB base of some sort. Okay, got 3 waves here, got 1, 2, 3 waves here. Okay, boom. That's what BNB looks like to me. EOS, again, it's very bullish. I mean, look at this. This is strong. You're going down, but then your momentum indicators on the higher time frames are going. Let's go on the daily. So if you look at what you're doing in EOS, as you're going down, you're actually coming up. I don't see that much divergence, to be honest. Yeah, I don't see. Yeah, I don't see the divergence here. It's not as strong. It's not as strong. Be honest, it's not as strong. I don't see any strong divergence. But it's bullish because this is support. This is support. Yeah. But I don't see any divergence yet in EOS. Zilliqa, one of my new ones. Zilliqa. AB basing again. This is what you see when you're basing. You're making a bunch of different moves here, creating a rounded bottom, and you're not, like, the bears try to push it down, but they can't. And what ends up happening is you get pushed down, but you start pushing up, and that creates what we call the rounded bottom. Okay, so that's what I see in Zilliqa. And last but not least, synthetics. Synthetics is bullish, right? I see synthetics having put in my read here is like this. Okay, so that's really bullish because this is what we would call a running flat correction, where you're not only getting an expanded B wave, right? So these 3 waves right here, that's a B wave. That's counter to this. So let's just be more neat about this. So this is my A wave right here. Okay, my 3 waves. This is the first wave of my B wave. This is the second wave of my B wave. That's 3, 3. And these are the 5 waves down. Okay, so that's 3, 3, 5, right, for my flat correction. So essentially, that's your A. This is your B, and then right here you have a smaller AB consolidation reversal pattern. Okay, it's very bullish, very bullish. And again, you should be able to see some divergence on the higher time frame. And do you? Yes, you do. And it's played out somewhat. Okay, it's played out somewhat, and that divergence was here. You had a lower low, and you had a higher low here, and that played out right here, and came back down. But I anticipate you're gonna go back up. So that's synthetics, right? So that's the watch list. Let's have a quick look, see if I haven't missed any chats. Alright. Oh, nice. That's really smart. Osman says, I added Kadena to my portfolio 3 days ago. Yeah, Kadena's... I mean, the last time it ran like hell. It was one of those assets that just listed, and I was like, whatever. And my brother made 5 figures on it, like, and he doesn't even trade. He just buys stuff that, you know, he thinks may do well. And he sold, but it ran so fast, and people were like, it has to stop now. It has to stop now, and it wasn't stopping. It did really, really, really well. You don't see any monthly data because it's so new. But that was what I'm talking about here. When Kadena first came out, here, let's go on the log scale. It basically did this. It went up. It did 7,000. It did 8,000% in 100 days. It was ridiculous. Remember? I don't know if you guys remember that. Every day people were like, yo, it has to stop now. It has to stop. There's no way it can keep going. And that's the beauty of being able to read, price action, be able to read a chart. If you can read that, maybe you can read 5 waves and see that it's not exhausted yet, right? But it's hard to say because it was all price discovery, right? There was no chart to show you like, oh, it had already hit this high and this would be a higher high, or this would be a new all-time high, or whatever. It just kept doing it on and on and on and on. So it was hard to say. But now it's retraced to where do you think it's retraced to? Exactly the 0618 right here. Look at that. Do you see that? So anybody who said, oh man, I missed out on Kadena, and Kadena did so well, it went up 8,000% in 100 days, it came down for you in 3 waves for what is a quintessential wave 2 correction. So if you thought this was cool, just wait until you see this next move. This is why this is my biggest position on spot. Because the projection, just the projection of this, right? If you take this and you do your Fibonacci extension of wave 1, retracement of wave 2, your wave 3 should take you to really, really high levels. And that is, again, what you should expect on average. A minimum of 1618 to 2 Fibonacci extension of wave 1, retracement of wave 2, right? So all of this since May 12th has been your AB base. And you can see it here, right there. That's your no trade zone. That's just your buy zone. That's your, and people who say, oh, it's going to break down, or people who say, oh, it's, market's not bottomed. Okay. If you think, obviously nothing's for sure, everything's probabilistic, but it's very probabilistic that this is indeed a market bottom on the high time frame for Kadena, and that the next move is coming very soon. Okay, so that's pretty much it. Let's have a look at the bubbles, then we'll call it a stream. Guys, don't forget to like the stream, shout yourselves out. So bubbles. So this is the top 100 we're looking at. So Luna Classic, I'm not touching that with the 10-foot pole, but it's up 21%. Good for Luna Classic, and anybody who's been affected by Luna negatively, I hope you guys make some money. Kava, Lido, Chili's, okay, they're up. Top 200, Luna, okay, sure. I don't even know the difference between Luna and Luna Classic. But Luna's up. Not many double-digit movers that I know of. I don't know MXC. I don't know that. Top 300. Lazio and Sure are up double digits. Rally's up big. PYR's almost up 10%. Top 400 REI. That doesn't look like the REI I know. But it's up big. Up almost 60%. Top 500. Rook is up 24%. And we're going to round it out with the top 600 altcoins. XHV, that sounds like a disease. That's up 16%. KRD, 23%. All right. So that's pretty much it for market roundup. What's going on? Short-term dump or small time frame dump or whatever. Okay. Completely unbothered. As should you be. Completely unbothered. Once you see an M pattern like this, I'm just draw this out. Like, as somebody who sometimes gets nervous, there are some instances where even if you had that wick and that strong buy pressure, you could get a really strong move to the downside even after that. And that's in the case where you have a zigzag, because you will have a strong wick here, but then you'll go up and then you'll continue to go down significantly lower than that. Okay, those are some of the small instances where even if you had that wick, yeah, you might get a lot more downside price action. But typically, when you're basing, if you get that wick and you come back down, don't expect to go down too much further. You're gonna get some sort of W pattern. I said M. I meant W. Okay. So coming back down, you're basically, putting in the final touches of that small time frame AB base. All right. That's it for me, guys. Hope you got value. If you liked the stream, definitely like the stream. Subscribe to the channel. I'll be here tomorrow and every other day to just talk about crypto, talk about the markets, and give my analysis. But that's it for me. I have a meeting. Take care. Hope we experience a huge pump today, and hope you're having a great Wednesday, and hope you're well positioned to take advantage of what's likely going to be a very, very big move to the upside in the cryptocurrency market, in the traditional markets. All right. Bye.